Gold and silver prices. What exactly can we expect from the metals next week? Now, next week is going to be a pretty big week for, well, pretty much one specific reason. And that happens to be the inauguration of Joe Biden. That will happen on Wednesday, January 20th. Now, before then, Monday and Tuesday. Monday is MLK Jr. Day. Markets won't be open. Tuesday, we will have no economic data that will be presented. Wednesday, obviously, we have the inauguration, but we'll also get the National Association of Home Builders Index for January. On Thursday, we'll get the initial jobless claims, continuing jobless claims, housing starts, building permits, and Philly Fed Index. On Friday, now this is one that I'll probably be paying attention to the most. It'll be the market manufacturing PMI for January and also the market services PMI for January. Now, as far as what we can expect from gold and silver prices next week, obviously, in the very beginning of the week, there really isn't much happening as far as economic data being used as catalysts. Possibly there could be something happening within the foreign exchange markets that could bring the dollar down, that could possibly bring gold and silver prices up. But honestly, I think we're going to have to contend with the VIX. And I wouldn't be surprised if the VIX starts rising, particularly around or on Inauguration Day. Now, there had been reports that there were going to be protests at various capital locations across the different states in the United States, not just in DC. So there could be different demonstrations happening while the inauguration is going on. Now, this could cause some, volatility happening within the markets, which could impact gold and silver, possibly to the downside. So that's one thing to look out for next week for gold and silver prices. Now, just like in yesterday's video, I have to reiterate that even though gold and silver may have some issues in the short run in January, I do expect that gold and silver will have a pretty good 2021, mainly because of A, we're going to get most likely additional stimulus, being that Biden really wants it and he has a majority blue Senate and House. That's going to be in the first half of the year. In the second half of the year, we should really start to see CPI rising a lot more, which will help gold and silver prices rise to the upside with negative real rates. Remember, Jerome Powell said he's been on record in stating that he will not raise the federal funds rate until he starts to see 2% inflation for a consistent period of time. Then he will consider raising the federal funds rate from its near zero lows. And once that happens, then that'll be time for us to really start reconsidering our positioning when it comes to gold and silver. That might be a time to maybe sell some if you are looking to do more of a shorter term trade. For those of you who are into that, some of you guys are more so into holding it for the longer term. Some of you guys may be considering selling just because I've talked to some of you guys who have said, hey, this might be my last bull market. Don't want to take any chances. So, hey, you might want to start liquidating when you start hearing things like that. Another thing, too, is if the Fed starts to target those the longer end of the yield curve, particularly if they start buying a lot more of those longer maturity bonds, while even selling some of those shorter maturity bonds. What that tends to do is strengthen the DXY in the short term. That's essentially what happened right around the time of 2012. And it really started to kick off this period of gold prices coming back down from their 1900 highs to, the lower 1000s. And this really started right around that period of the Operation Twist. And we've heard talks and murmurings of Jerome Powell stating that he wouldn't mind doing some yield curve control. And that's a strategy that a lot of people have stated that they've lifted from Japan. But we've also done a little bit of our own yield curve control back in World War II. So we've had historical precedents for this. There's also been international precedents for this. I wouldn't be surprised if this happens again sometime in the 2020s and we start to see a rise of the dollar. Now, I don't know how realistic that would be, especially if we start to see a wildly strengthening dollar. I don't know how realistic that would be, given the fact that we still have to compete with the international market as far as attracting customers. For example, why do business with, the United States that denominates their products with a strong dollar when you could, for example, do business with the Eurozone relative to the dollar? The euro might be a little bit weaker. So why not do business with the Eurozone? So we're still going to have to deal with international competition when it comes to our currencies. So we'll see how all of that plays out in the future. But I wanted to leave you guys with a pretty funny exchange that I saw on Facebook. And it was underneath this advertisement for a Barron's article. The article was titled, 2021 could kick off a new era of prosperity, but first, there will be some bumps. Someone said, and I crossed out their names and pictures, someone said, are the roaring 20s back? Then another depression at the end of the decade? It's a roll of the dice. Then someone replied to him saying, hopefully we will learn from history. Anyway, the feds and others have more levers today than back then. Let's see. And I thought you guys would kind of find that pretty funny, just given the fact that one of the reasons why we're in such a deep ditch that we have to dig ourselves out of is because of the Fed. The more that we borrow from our productivity in the future, the deeper we dig our ditch, and the harder it is for us to get out of it because we're so over leveraged in debt that it makes our productivity, our growth in productivity, much more slower, that rate of growth. Now, yes, we could issue more bonds, but the thing we have to remember is that our customers are thinning. That's why the Fed will likely have to play more of a role in the future as far as buying up more of these bonds. Again, digging ourselves into a ditch. Yes, we do have foreign countries that do buy our bonds, but we're starting to see a lot more selling of these bonds in larger amounts. Lastly, let's take my opinion out of it and let's go straight to the World Bank. Now, the World Bank had already projected before the Ronies, as we like to call it here, that global growth between the year 2020 to 2029 would actually slow to a yearly average of 2.1% from 2.5% in the previous decade. Now, because of the, issue, the bank actually lowered its projection to 1.9%. Now, one of the reasons why they originally were thinking that global growth would slow from 2.5% in the last decade to 2.1% is because of aging populations and, what did I mention before? Lower productivity growth. There is a reason why we will have lower productivity growth. We are saddled with so much debt, and also given the fact that we are losing one of our largest populations who weren't as saddled with as much debt. Now, the millennials, Gen Z, all of us, I am a millennial. We are saddled with a lot of debt. It's going to be harder for us to dig ourselves out of this ditch. And it's been long reported that millennials will be one of the first generations to not make more money than the prior generation, for the Gen Xers. So obviously, our productivity is being hampered right now. And with the Ronies, it's only going to be worse in the next decade. So this potential output, again, the World Bank states, assumes that the world economy is operating at full employment and capacity. We're not even talking about the unemployment issues that we're having. We're not even talking about the introduction of more AI in our society, which will likely take a lot of jobs away from people. So, all that aside, will the 2020s be like the roaring 20s? I don't think so. But let me know what you guys think in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.